Hello, everyone. This is Ankit Kanodia. Welcome to this session. A little bit about myself. I am Ankit Kanodia, co founder of Zen Nivesh. I've been investing in the market since 2010, so about 15 years now. For the first 6 years, from 2010 to 16, it was more out of hobby and passion and with very little capital. And from 2017 onwards, I have been a SEBI registered investment advisor and have been advising our clients also on equity market. Now, that's a little bit about myself. Now let's come to the genesis of this product on which we are going to talk, which is stock SIP. So in 2013, I invested in a microcap company which was at that time around 1000 crore market cap, and in 2020 it was having a market cap of 20,000 crore. I happened to invest in that company. So, from an XIRR or an CAGR perspective, it was a fantastic outcome for me because that 1000 crore market cap company became a 20,000 crore market cap company and it's a 20 bagger. But what I realized in 2020 when I was going through my portfolio, what I realized was that I didn't average up on that investment. So maybe on the calculator or on the Excel sheet, that CAGR number was very encouraging for me, but it didn't make me as much rich as I would have thought myself to be. So that was the biggest learning I got, that when you have a long term bend of mind, where you think that you find some good businesses and you can stay invested in them for a long term, your allocation becomes very important. If you don't allocate well, so then probably just on the spreadsheet your returns would be great, but ultimately investing is all about how we increase our net worth over a period of time, right? We can give all kinds of gyan, but the main purpose of anybody investing in the stock market, either through mutual fund or through direct stocks, is just one, which is to increase their net worth. And if that is the case, I believe it is important that we pay a lot of attention to allocation. And that is how stock SIP as a idea got germinated in my mind. And from August 2020 to August 2025, exactly 5 years, I ran a multi-cap stock SIP portfolio for myself, and I have documented everything on our Zen Nivesh Substack blog. You can just type in "Survive to Thrive Zen Nivesh blog." You will get the link. And anyways, after the session, we'll share it in our details as well, in the description as well. In that, I have shared my learning of the last 5 years of running this portfolio. The only difference this time, which we are coming up in Zen Nivesh, is that the last time my stock SIP portfolio was a multi-cap portfolio. It had large cap, it had mid cap, it had small cap, it had micro caps, it had everything. However, this time it is a focused micro cap portfolio. So I'll just take 10 to 15 minutes to quickly go through, or maybe 20 minutes to go through a short presentation slide to give you a flavor as to what we are going to do. And then maybe we can take up as many questions as possible. Okay. So just sharing the screen. I hope my screen is visible. Refresh. Yeah. I hope the screen is visible to all, right? Can anybody just confirm if it is visible to you or not? Can you see the Zen Nivesh Portfolio Advisory ZNPA? Okay. Okay. Thanks, Shankar. Now, Quickly going through the slide here. So, what is ZNPA? It is a stock SIP in microcaps. We'll come to what is microcap and how we are going to run this portfolio. Okay, so the first thing which you should realize is that if you look at the real data of any market, be it Indian market or US market, most people don't actually want to beat the market or want to be under the impression that I have to be the best investor or have the best CAGR. The general requirement of most investors or most average investors is just a simple process through which they can beat inflation handsomely, and their purchasing power of money should not go down or maybe increase over a period of time as they progress in their career, be it in a job or in a business, right? And that is why SIPs and index funds work really well for most of us. And there is nothing better than this, where if it comes to your personal finance, if you have your insurance, be it your term plan or your health insurance figured out, if you are having a reasonable allocation to mutual funds, your personal finance is covered. And we at Zen Nivesh are not trying to give you any personal finance product. And we are not trying to say that don't do that and come and take our product. You will get better returns. No, that is not the idea over here. The idea over here is that if you have all that already figured out, and if you want to put a foot in the door in a space where most people probably uh, don't know how to look at that space, probably you can take baby steps by having some exposure using our strategies. Okay, now why microcap and what is microcap before going ahead? Microcaps in general are volatile, misunderstood, and because of this volatility, it is not for everyone, because this heightened volatility in this space often is considered at par with risk. So, because it is highly volatile, most investors consider it risky, and that is why most investors stay away from it. However, our view at Zen Nivesh is very clear that you get paid for taking that risk through handsome returns as well. And it is not that risky if you can identify a few good businesses by doing the ground research. Okay. Having said that, the volatility is not for everyone, and we don't want to sugarcoat that there is no volatility. It is a fact, and we don't want to hide that fact, right? So, what are microcaps? SEBI doesn't define the category of microcaps. SEBI makes it very clear what is large cap, what is mid cap, what is small cap. In SEBI's definition, the top 100 or top 150 companies are large cap, next 100 companies are mid cap, and beyond those, everything is small cap, right? But we come much below that standard definition of SEBI, because if you look at the small cap definition of SEBI, even a 30,000 crore market cap company is a small cap company as per SEBI's definition. However, for us at Zen Nivesh, we believe microcaps is something which is below 3,000 crore market cap. So in our stock SIP portfolio, our general focus will be in smaller companies. However, there will be a few companies where we may go beyond 3,000 crore, say maybe 5,000 crore or 7,000 crore or 8,000 crore. But we have consciously made a constraint that we will never go beyond 10,000 crore market cap. Why we have chosen 10,000 crore? Because we want to focus on a very clear, demarcated zone of smaller, misunderstood, undiscovered businesses. We don't want to go into businesses which is well discovered by the audience, well discovered by the institution, and that is where we believe our edge lies. Okay. Now, who this is not for? Before coming to who this is for, who this is not for is more important. If you are thinking that you cannot handle volatility, please don't subscribe to this, because volatility will be there. Okay, we cannot, it is something which is the design of microcap space, and not a or what rather I should say, uh, it is a feature, not a bug, when it comes to microcaps. So we don't have a magic wand which will let the volatility go away. Of course, we have a system and process in place where we can manage risk, but we cannot mitigate volatility. Volatility is the nature of the market, which will always be there. So if you are someone who cannot handle volatility, you should not subscribe. If you are someone who cannot take a longer term call, because see, it's an SIP portfolio, in the initial 2 3 years you are in the investing phase, you can't expect high returns in that. So until and unless you stay with the whole philosophy for 5 years, you cannot expect to have a fair view of whether we did well or not. Okay, so that is also one thing. If you can't have a longer term horizon, say somewhere between, at least somewhere between 3 to 5 years, I think this is not for you. You should not subscribe. And third, and the most important, SEBI also mandates it, and we make it even clear to our customers that we never guarantee any returns. We have shared our experiment and our track record of the past, but don't take that track record as any guide for the future. Take that as an understanding as to how stock SIP is done, what are the risks, what are the rewards, and don't think that the same performance will be repeated. It can be better than that, it can be less than that. We can't guarantee anything. Okay, so if you are looking for guaranteed returns, again, please don't subscribe. Now, now it is important who should subscribe. I believe because we have just started, because this product is getting launched on 15th of Feb, and you don't have any uh, track record of Zen Nivesh on this product. It's a new product where there is a perceived risk in the category, where there is volatility. We would recommend you to not put a very high allocation of your net worth. So, for example, if say you have, just for the sake of example, let's understand you have 100 rupees to be invested in the market, and you would have already invested them in some form or the other, maybe in mutual fund, maybe in direct stocks, maybe through PMS, whatever be the route. Don't go beyond 25 rupees when you are starting this microcap investment through us. The only reason we are saying that don't put more than 25% is because, however simply we may explain to you what are the risks, what are the rewards, what kind of volatility you can expect, it is very difficult to ascertain how much you are ready for that volatility. Only when you feel it, you will understand whether you are ready for it or not. And everybody is different in that aspect. So we don't want to guess for anyone. Maybe some of you can handle the volatility, more power to you. But for majority of us, we believe that humans are same. Volatility takes the worst of us, and we make many decisions. We take many decisions in panic, which I think you should try to avoid. And that is why a low allocation, and then slowly increasing the allocation as and when you get more confidence, A, in the strategy, and B, on our way of solving or doing this, that will help you to slowly scale your allocation to this uh, particular segment, only if you are comfortable with it, right? Now, where macro cap fits is, again, I think we all know that with the help of internet, now AI, now social media, if you combine all these things, there is no dearth of information, or even today analysis on the majority of stocks which are there. And micro caps are the only space where, even with all the analysis and the information which is floating around, be it annual reports, be it BSE filings, be it social media chatter, you cannot be sure about the completeness, because many of these management or companies, they do not share much about their businesses uh, on the annual report. Some of them don't hold any quarterly conference calls, and that is where our edge lies in Zen Nivesh. Because one, we try to meet management, do plant visit, and do the competitor analysis, try to meet as many people in the industry to understand what is happening in the ground. Second, we are fortunate to have a very good network of investors across the country, where if there is a business or a company where probably the promoter is not ready to meet an analyst or a investor, probably somewhere some friend of the promoter or somewhere in someone who may meet the promoter and can give us some insight. And when I say insight, it is not about insider information. Insight means something which is happening in the business which is not there out in the public. uh, what could be that? Maybe there is inventory sitting on the books for a long time, but they are waiting for an order. And maybe you are aware of that this particular industry is now going to get those kind of orders from the government, and then you can connect the dots and invest in those businesses, provided valuation is comfortable. So these things act as an edge for us. One is our own scuttlebutt process in terms of going and meeting the management and doing all the groundwork. And the second is trying to leverage our network across the country, which helps us in finding stocks which are not in the radar of institution generally because of scale. Because most institutions have a scale, uh, they will not look at smaller, tiny microcap companies, and that is where opportunity lies. So these are our three golden rules which we follow in ZNPA, the stock SIP portfolio. Uh, People who are knowing me for some time would have already heard about them. We don't try to make any predictions. We are just preparing. Say, for example, today in February 2026, if you ask me when the market will stabilize or go up, I have no idea. And I don't want to even try to make any prediction here. The whole idea is that the micro cap space, especially the stocks which are below 3,000 crore market cap, in that space we have close to 3,000 4,000 companies, and out of those 3,000 4,000 companies there are a lot of good quality businesses which are trading at a very attractive valuation. Now, very attractive valuation doesn't mean that they will not remain here for long. They can remain here for maybe 2 months, maybe 2 quarters, maybe 2 years. But the idea is that because the valuation comfort is there, because there are some growth triggers in the businesses which we find attractive, we believe it is a good time to at least start making some investment through SIP form in them, right? And that is why it is a stock SIP portfolio. You're not expected to put all your money at one go. Rather, just like you do SIP in mutual fund, you do a SIP here as well, fixed amount every month in a basket of stocks. That's it. Second rule is do few things, do them well. I will focus only on businesses and sectors which I understand. If I don't understand anything, I will avoid it just because it is the flavor of the market, just because it is something which is in momentum, doesn't mean that I'll have to go and buy that stock or buy that theme, right? And the last one, which is the most important, through ups and downs, whether market is near top, we near bottom, we don't try to predict, and we don't stop our investments. We consistently invest because we are investing for the long term. We are not investing for the next 1 month. We are not investing for the next 1 quarter. We are not even investing for the next 1 year. So put that money where you think that money is not going to be required for your daily use over the next few years. if you have any emergency or anything which is needed in your personal life, don't put that money in this scheme. What is a good microcap bet? Ideally, a good microcap bet is a business which is either slightly misunderstood, or which has not done well for a long period of time, and now there are some structural changes happening over there, or a high quality business going through some temporary pain, which we believe is near to getting solved. So these are few of the examples which makes good microcap bet, and that is because of these reasons. At times you have stocks trading at very attractive valuation in this space. So, for example, you would have heard this from many people that even after this correction in the market, the large cap and the mid cap and even the small cap stocks are trading at are not trading at any cheap valuation. In a way, that is true, but when you come down further and look at the microcap space, some of the stocks are trading at 3 year, 4 year, 5 year, or even at 8 to 10 year uh, valuation low, or attractive valuation from a 8-10 year perspective. That is the kind of attractive pricing can happen in the microcap space. Uh, in our watch list universe, we have many stocks which are trading at uh, between high single digit to low double digit price to earning ratio, with a decent understanding of the earnings growth over the next few quarters. So those are the kind of businesses we are talking about here. What is our thesis for all the stocks or all the allocations in our portfolio? We will have a clear thesis for over the next 2-3 year, what we think about that business, what are the fundamentals looking like, what are the catalysts, how much of that is in the price, and do we think that the valuation is comfortable. So understand that because it's a stock SIP portfolio and you're buying every month the same stocks, same set of stocks, until and unless we change the composition, there will be times when some stocks will become expensive. So we will always have watch list ready whenever a stock becomes very expensive, and one of the watch list stock becomes very attractive. We will always make those switches. Just because we are long term investor doesn't mean that we'll keep holding the stock forever. We will make those switches whenever it is the right time to make that switch. Okay. Exit is a process, not a panic. The reason we are saying that is that this happens when you fall in love with your idea. Sometimes it's easier to probably keep on investing in an underperforming stock, and it is easier to exit a stock which is performing. And that is why we will try to follow the rule based exits, where, say, for example, a business which enters the stock SIP portfolio, if for 2 years or 8 quarters at a stretch, the business disappoints and also the stock price disappoints, or both of them disappoints, we will exit that stock just as a process, because we don't want to fall in love with our ideas. We don't want the non-performers to block the portfolio. The winner should take care of the portfolio. If those businesses start performing well later, we will again buy them. But as a rule, the non-performing businesses after 2 years, we'll give a hard 2 year or 8 quarter as a hard rule. If the business or the stock price or both do not perform as per our understanding, we will exit without thinking much. That will help us to have a far more robust portfolio, because anyways we are covering a lot of stocks every week. If you have been following our Zen Nivesh Substack blogs, which we have been doing for last 9 months. In the 9 months, today only I was checking, the 41st stock idea or stock related blog will be written tomorrow, or will be published tomorrow. So that is how regular we are in terms of researching new ideas. Of course, not all will fall in the all not all will find place in the portfolio, but they definitely find place in our watch list. And we continue to remain very agile, very focused on finding new ideas and growing our watch list, and be ready for making the switch in our portfolio as and when the market demands. Again, what you should expect, I think expectation is something which is very important. We don't want to give you any uh, lofty projections or any this thing. What you can expect is volatility. What you can expect is non-linear journey. But my belief is that if you can handle volatility, if you can handle non-linearity of your portfolio performance, there is a higher probability of better wealth creation. Because if you are only looking for smoother wealth creation, then the best choice is undoubtedly an index fund, maybe a top 500 nifty stocks index fund, just like the S&P 500 in the US. That is by far the best way to manage your personal finance. But if the idea is to slowly try and take a small foot in the door to see what the universe of microcap looks like, then you can probably start with a small allocation of your net worth in this space. Again, no, what I've already said, don't expect smooth returns, don't expect yearly outperformance, and don't expect any short term comfort. This is very important. It's not about just giving you gyan, it is also putting my money where my mouth is. From whenever we launch this portfolio, I will have my own funds invested in that portfolio, and all my incremental savings which will be put into the market will be in the same portfolio, in the same allocation which I will be recommending to you. So while I cannot guarantee returns, I can guarantee my full skin in the game in this process. Pricing is very simple, 10,000 rupees per year. We will do it through small case. There is no hidden cost. The launch will be on 15th of 2026. Uh, I think it is important to break it down to what will be your cost of investment. Say, for example, if you are investing 1 lakh rupees a month in SIP, so for 12 months, it will be 12 lakh rupees. And if you're paying us 10,000 rupees for that, your cost of investment will come to around 0.08%. So if you reduce the amount of SIP, proportionately your cost of investment will increase. But the idea is that even with, say, something like 25,000 monthly SIP, your cost of investment will be below 0.5%. That is what we thought that we should keep in mind while launching the product like this. Now, because we'll be doing it through small case, I had spoken to some of our members, and I'm sure you all would be having some questions related to our investment philosophy and small case. But before I get and take up your questions, which are there in the chat box, what I would say, I would try to discuss a little on the three aspect of small case which some of our investor friends brought out to us, and how we are tackling with that, and how we believe that uh, small case is a very good platform for us to launch this kind of a product. So the first point which I hear from many of my friends is that there is no concept of hold in small case. Like, for example, in case of, say, if instead of a small case, if you would have run a PMS, and if two investors would have come at different times, in we could have had different cash component for different investors, right? For the same PMS scheme, because one would have come at a time when the market was in panic, and the other would have come at a time when the market would be in euphoria, or maybe not as attractive as it was in the previous case. So that kind of adjustment is there. possibility is there in case of PMS, but not in small case. But we at Zen Nivesh have figured out how to tackle that. We have opened this subscription today, as in on 15th of February, at a time when the microcap space is down in the dumps. And we don't expect it to get up anytime soon. The moment we see that the market has started doing well and the valuations are shooting up, the first thing we'll do is we'll stop our new subscription. We'll continue to serve our existing customers, but we'll stop our incoming customers. The reason we want to do that is we don't want anyone to enter at a time and start his or her SIP when the market is not at a very attractive level. Okay. While we keep saying this, that you don't stop your SIP, whether it is at high or at low, you continue to invest. But we don't want anybody to start their SIP at a time when market is not at a very attractive level. So this problem is getting solved through this medium, that we have launched it at a time when microcaps is down in the dumps. There is ample valuation comfort available in this space. That is one. Second, the moment we see that the space is getting heated up, there are a lot of stocks flying up, and the valuation per se is not as attractive as it used to be, say a year from now or a year ago. The first thing we'll do is we'll stop onboarding any new clients, and we'll focus only on serving the existing client. So this problem or this feature related issue gets solved here, right? Number two is, we have heard from many again investors that they face a little problem in terms of order execution, where they say that, say for example, if you have a lot of subscribers and you ask everyone to buy the stocks at a particular day at a particular price, and if all of them start buying at the same time, the price will shoot up. Maybe your small case will show great returns, but your investors will probably not have the time or the same allocation at the same price. And that's a fair point, but we have a very simple solution to that. It's a stock SIP portfolio. Every month at the start of the first trading day of the month, we will give you 20 stocks. We will give you 10 allocations, and that 10 allocations can become, say, 12 to 15 stocks at max. And we will give you the day on which you have to buy. Now you have the whole month at your hand. Say for example, in day one, you started to buy, but some of the stocks have started going up for whatever reason, which is beyond your control. You can wait for a day throughout the whole month to do that SIP amount, to invest that SIP amount. You don't necessarily need to invest on the first trading day. On the first trading day, we will give you the allocation details of all the stocks. We will give you how much you have to invest in that. And we will keep sending you reminders throughout the month that, see, we had sent this on day one, but you have not executed it till now. You can still execute it. So maybe on a weekly basis, we'll send those reminders to everyone. But the idea is that you don't have to rush to buy those stocks. We are not in a rush anyway, and we are not going to give you any short-term trading call. It's a long-term oriented stock SIP portfolio. So you will have all the time in the world to buy and allocate based on your price, based on your comfort. If you are busy today, don't want to execute today, traveling today, wait for the day when you are a little free and can execute it easily. There are brokers, new age brokers, who have the concept of stock basket. You can automate the whole process on the first day of every month. Whenever you get the notification from our side, automatically it gets executed at your end. So depending upon what kind of investor you are, you can make those changes. The whole idea is that you don't need to rush on day one when we are giving you the allocation. And every month you will invest a small part of your savings here. So don't panic if you could not buy on day one. You have next whole month at your disposal to do that, and hence that order execution problem will not be a problem in this particular small case of Zen Nivesh stock SIP portfolio. Okay, I hope that is clear. Now the third one and the most important one is that uh, we see that there are monthly and quarterly plans at small case, and we believe for our kind of product they don't make any sense. uh, we are not trying to say that those are of no use. Maybe it is of a lot of use for a lot of other kind of portfolio managers, but for us it doesn't make any sense to keep uh, monthly or quarterly plans. We will have just one plan, which is a yearly plan, and for 1 year you can take a subscription, see how we are doing. If you don't like it, you can obviously not renew. But the whole idea of keeping it yearly and not keeping it monthly or quarterly is that we don't want the high fluctuation in the market to disturb the customer inflow and outflow. We don't want high churn. For us, what is most important is to peacefully serve our customers who are there onboarded right from day one. Okay, so with that, I come to the end of my presentation. Given you an idea as to what we are looking at, how we are going to approach this space. Uh, we have given you the idea about how we are going to leverage the small case platform for this. Now, if you have any question related to our strategy or anything related to small case, um, I would be happy to answer them. Yeah, I'm seeing the chat box. I don't see any questions yet. If anybody has any question, please go ahead. Okay. Yeah. So Raj asks, we know that microcaps are volatile, but can you give range of the upside or downside gains or losses? Uh, it's very difficult to pinpoint a clear range, but I can give you, based on my experience in the past of some of the microcaps, there could be uh, the best case scenario could be a 5x or a 10x in a stock over the 2 3 year period. That is the best case scenario. And the worst case scenario could be a 50 60% negative in a particular stock. Uh, ideally we would like to reduce those kind of stocks. However, it's the nature of the space. We will eventually or sometimes have some stocks in our portfolio which will go down. And as I gave you, 50 60% down from the original price can be the worst case scenario. But try to understand that you should not focus on one 5x 10x stock or one uh, minus 50% or minus 60%. The main reason the main thing you should focus on is that if we are able to ride the winners for a longish period of time, and if we are able to cut the losers as fast as possible, the overall portfolio returns will be decent, and that is what we should focus on. There will be misses. I don't want to give you a picture that there will be no wrongs. We will get wrong in our stocks, and as I said, we have shared the last 5 years experience in our blog. So you can see there are many stocks which didn't do well. In fact, that was a 20 stock portfolio. I remember 3 to 4 stock in that completely didn't perform well, right? How to subscribe? Is it available in the small case? So yes, it will get available in the small case from 15th of Feb. 15th Feb is a Sunday, but you can subscribe on a Sunday as well. It's an auspicious occasion of Mahasivratri, and we thought that that would be a nice day or occasion to launch something which is very dear to us. So you will get the link at that time. On the 15th, you will get the link, and then you can subscribe. Just you can subscribe on that link, make the payment, and you will get the access to the portfolio. Any exits will have to be executed same day or at a later date in a month as well. So that's a good question actually. Let me explain it in a proper way. On an average, most months will be like the same set of stocks. At the start of the month, we will give you the allocations you have to buy. Okay, most months will be as boring as this, nothing change. However, there will be times when we will make a switch. We will make, from time to time, we will kick out the losers and bring in a potential winner from the watch list. So whenever we do that, we will give you a intimation. Again, nothing is a short term trade. When we'll give you an intimation, you can do it the next day or the following day or the following week. Nothing goes, as in, it's not something which is so urgent that you have to do it immediately when we are saying. And when it comes to your question of manual execution, if you are coming through small case and if you are routing it through your demat account, which is there on, which is basically portable to the small case platform, it will all be executed automatically. You don't have to do manual execution in that case, right? What makes it different from stock advisory plan? Good question again. So in the stock advisory plan, the first of all, the focus in stock advisory plan is more of investors who can take allocation on their own. So while we recommend 10 to 12 stocks in the stock advisory plan, an investor who is experienced enough and prudent enough can invest in one, two, three, or maybe four ideas and can do the allocation of his choice. Plus, in the stock advisory plan, there is a hard limit of 3000 crore. So all our 10 to 12 ideas will be less than 3000 crore market cap only. And the third is, over there, our focus is more on businesses where we see the possibility of earnings trigger playing out over the next 2, 3, 4 quarters. Okay, so the time horizon is a little shorter there. We believe that the probability of the stocks doing well over there is shorter than, or maybe the time period in which the stock should start performing there would be slightly shorter compared to what we do in stock SIP. Now, coming to stock SIP back again, in stock SIP, the main purpose of stock SIP is for investors who cannot do allocation of their own. For them, allocation is something they are dependent on us. So we make it very clear that how much you have to invest in which stocks. And fundamentally, the difference between the stock advisory and this SIP portfolio is that SIP portfolio is managed by me. I am a slightly longer term investor. All the stocks which we'll buy now, in the first 1 year or 2 years, we are basically in the investing phase. We will accumulate those stocks, and maybe in the third year, you will see the real returns from those stocks. Okay. So that is what I wanted to make the distinction between. The next question is, okay, Rohit, you asked about the payment option. I'll check with the team. I don't have it right now, but I think net banking payment option should also be there. But let me check and come back to you again on this. If after investment at some point I want to exit, how can I do that? And how will I allocate funds to particular stocks? Uh, it is your demat account. Till the time you are subscribing to our service, we are guiding you how to allocate your capital. The moment you want to exit our service, then you are on your own. It is your demat account. We don't have any control over your demat account. You can just simply liquidate as per your wish. Coming to we giving you exit call, obviously in that case, The small case platform makes it very seamless. You don't have to manually exit anything. You will be sent a notification. You just have to use your OTP and authorize it, and then the execution will be done at the back end. Okay. Whether it is needed for you or not, if you have already subscribed to our stock advisory service, maybe we can take it offline also. If you want to have a call with us, you have to, I have already presented what you should expect, why you should invest. If you think you are good enough to allocate your capital on your own, and you don't need any handholding in terms of allocation, probably you don't need this product. But if you think allocation is something which becomes a bit of a challenge for you, and you want to, if you are thinking about the complexion of the portfolio, probably ZNAS, which is the stock advisory stock advisory service, and this ZNPA, which is the stock SIP portfolio, we will rarely have common stocks here, because the whole philosophy is different, the way it is structured is different. So the stocks will not be same. There may be a few stocks which will be common, but by and large, 90%, 95% of the portfolio will be completely different. Okay. Minimum amount investment, I don't want to give you a number that you will have to figure out. Of course, small case platform on its own generates a number the moment the portfolio will be up. You can see that. But our understanding is that you should also look at the cost of investment. So the cost for you will be 10,000 annually. So as I gave you a rough number, that if you are investing 25,000 every month, so probably you are investing around 3 lakh rupees a year. And out of 3 lakh, if you are paying us 10,000 rupees for that, your cost of investing comes to roughly around 0.5%, which is, I think, is manageable. The lesser you go on that number, your cost of investment increases. The higher you go on that number, your cost of investment goes down. I should not be telling you what is the minimum investment amount. I would rather give you a fair idea as to that investment amount can be as small as, say, 5,000 rupees or 10,000 rupees to begin with. But the idea should be that you should be able to stay invested and be able to invest that amount on a regular basis. If you think that amount is a challenge for you, probably you should not keep that. So always start with an amount which you think is very easily manageable for you, and you can do it consistently over the next 2 3 years, 4 years, 5 years. Don't think only for the next 6 months or 1 year, right? In the 10 or 12 stocks small case portfolio, will the amount put in equally distributed to all 10, or it is balanced by equal weight? Yeah, good question. So there will be 10 allocation, means all these 10 allocations will have 10% equal weight. But within those individual allocation, there could be a single stock, or there could be two stocks, or there could be three stocks. So the total number of stocks could be, say, 12 to 15 also, but the allocation will be 10. So for example, let's understand it from an example. We don't have any investments in private banks, but say for example, if I want to allocate 10% in private banks, and I can do it either, say, investing 10% in HDFC, or investing maybe 4% in HDFC, 4% in ICICI, and 2% in CSB, which is also a bank, right? So the idea is that there will be 10 equi-weighted allocations. Some of those allocations will be one single stock. Some of those allocations will be two stocks or three stocks. Okay. What percentage of our portfolio should be in this? I have already answered that question. You can start with a small allocation which works well for you, probably somewhere around 20-25%. I should not be giving you that number. It could be a higher number for you if you can manage volatility. It could be a lower number for you if you don't understand volatility. But Sweet spot would be don't start with something more than 10-15% or maybe 20-25%, right? The stocks given in the first month will be carried over for next few months or years unless there is a negative new. Yes, so this is right. The moment you get the first set of stocks and the allocation, we don't intend to change that allocation. Every month you will get a rebalance notification at the start of the month, because you have to do the SIP. The small case platform will give you the notification that you have to again invest the same stocks in the same allocation. However, if there is any change in the business in any of those stocks, or even if those are doing well, if one of our watch list stocks become very attractive, then also we can probably make that switch, kick out the least conviction ideas out of the highest conviction 10 allocation, and replace it with the watch list stock where we are very highly where our high conviction lies, right? How much percentage are we investing in the finance sectors, banks and NBFCs? So we, anyways, banks, most of the banks are very large. We don't have any exposure in bank. We will have a decent exposure in NBFCs. I don't want to put a number right now, but between NBFC and to a certain extent finance sector, something which is not if directly, maybe indirectly related to the finance sector, you will you can expect somewhere between 10 to 20% allocation of the portfolio will be there almost at all times. Okay. No. So again, good question, Raj Rao. Decrease amount of SIP or we have to keep it the same? The Our advice to you would always be that keep us think in your own mind what is the amount which you think you can invest every month. Keep that amount fixed. Don't try to increase or decrease based on market movements, based on your liquidity. You should have clear idea about your liquidity at the start. Start with a small amount. If you are not sure about the liquidity, that is also fine, but try to invest equally every month. That will give you the best uh, results. Do we need to keep stop loss for all these stocks? No, I don't believe in this kind of portfolio you need to keep any stop loss. See, we will in a way work out on the stop loss. Say for example, we start the portfolio from 15th of Feb. We don't know about market can correct even from these, or these stocks can also correct from these levels. Okay, so let's hypothetically understand that one of our stock from this portfolio falls 30-40%. During the same time, one of our watchlist stocks also fall 30-40%. And after that fall of 30-40%, we find that the watchlist stocks become much more attractive than the portfolio stock. It makes sense to make the switch. So we are not thinking from traditionally from the point of stop loss, but we are trying to optimize for the best stocks in the portfolio, irrespective of how much it has fallen. Maybe at times the stock would have not fallen by 30%, maybe it has fallen only by 10%, or it has stayed stable. But since the watchlist stock has become so attractive today, it makes sense to make the switch. So we don't look at stop loss in a traditional way, but we try to keep the bar high for the portfolio stocks. So let me give an analogy. Our portfolio stocks are always fighting with our watchlist stocks, and only one which has more muscle will eventually find way in the portfolio, right? Yeah, I think I've covered all the questions which have been asked till now. Any other question anybody would be happy to take up? Let me just go through the chat again. I don't think I missed any. Yeah. So I'll just wait for maybe portfolio. If we face some problems, I didn't understand this question. Do you address each portfolio if you face some problems? The whole reason for doing a small case is to automate the whole thing where all of you get the same portfolio, same advice, same allocation all at once. Of course, if you have any problem, if you face anything, our email address will always be there. You can always write to us. And if there will be a problem which needs a personal attention, we will definitely reach out to you and try to solve it. But the whole idea is, by and large, the platform is so robust and our process is so well defined. On a regular basis, we don't expect that portfolio related problems to happen in case of any of our clients. But of course, in case of anything critical, we would definitely be happy to help you. And our email address will be there. You can always write to us. Okay. Rohit, you have asked one critical question. I don't know which question you are talking about. Can you just repeat the question? I've already covered that, Rohit. Maybe you joined it late. I'll just repeat it again. Uh, uh, so, Rohit, as I said at the during the presentation, we will never give stocks which you have to buy on that day at that price only. You have the whole month to invest in the set of stocks which we are uh, investing. So, say for example, on the starting day of the month, we have given you a notification that buy these stocks, put this allocation, and when you start buying it and you see the market is going up, or maybe these particular stocks have gone up, you may wait. You can take your own time. You have the whole month to have a look at it. Okay. So I think I answered your question again. There's one stock specific question. First time I heard Purple Finance only through you. How we do valuation of these companies? Are we considering such tiny companies in our portfolio? So, okay, since you've asked, I'll expand on it. Purple Finance, we wrote a blog on Purple Finance. You're right, it's a very tiny company, and more than the size of the company, what we try to understand is that can we understand the business, and can we understand how the direction and a rough idea of where the book value will be in case of a finance company, how it will grow. So from our perspective, Purple Finance is too small a company and a too difficult a company. Rather than saying anything else, I would say too difficult a business for me to at this juncture decide how it will play out in the next 2 3 years. So I will keep it in the watch list because it is interesting, but I will not put it in the portfolio yet because I am not very clear about the direction. Now, there is another company in a different industry which is almost of the same market cap, but that company forms part of our microcap stock SIP portfolio because there I can understand the business, I can see why it is trading at such a low valuation, and I can see the direction of the business. I can trust the promoter. He has a strong track record in the past. So even though that is also the same size of the business, but that forms a part of our portfolio. So size is not a barometer. The barometer is, are we seeing clarity? As in, of course, all businesses and entrepreneurs have their own clarity and managements have their own clarity. Can I, as a fund manager or an investor, see that clarity, how the business will go? If I have that clear understanding of the business, irrespective of the size, if I have the confidence, it will form part of the portfolio. I mean, small case platform has limited actual allocation will change with price up and down, will not remain constant if price down. So that problem gets solved, right? I understand your good question again. It happens in the other small cases. It will not happen in our cases because we are always giving you an option to invest in the same stocks every month. So if the allocation gone up and down due to price, you will always have the next month to work around it. And when I'm saying equal allocation based on cost price, of course market price will keep on changing for each stocks, and you don't need to worry about that. You want the winners to run, so when winners will run, of course your market value of those stocks will be higher than the market value of stocks which will not perform well, right? So that is fine. But when it comes to investing, the equated portfolio, think from the cost side. Every month you invest the same amount in each stocks. Okay, I hope I answered your question. Yes, that is what I mentioned. So I think somebody saying I'm a doctor by profession, as we don't have time to study, can we invest in this portfolio, or it is, or is for who have been in? So that is the crux of our presentation. If you don't have time, you are busy in your own profession, this this portfolio works well for you, because uh, you don't have to worry about allocation, you don't have to worry about, that is being taken care by us. Of course, the microcaps has its own risk and volatility. That's a different point. But if you subscribe to the portfolio, you don't have to worry about anything. You just get the recommendation from us every month, and you can keep on investing based on the recommendation. I think this question was there earlier also. Can you distinguish between different services of Zen Nivesh? I'll just quickly take this question once and for all. We This is the third service we are launching. We have one service where we are, basically it's called Zen Investing Club, where we teach investors how to invest in the microcap space. We do a lot of webinars every month. That is one service. Second service is targeted towards experienced and prudent investors who can take allocation call on their own. For them, we give stock recommendation service, 10 to 12 high quality microcap ideas in a year. And this is the third, which is a stock SIP portfolio, which is basically for investors who want handholding in terms of allocation, who do not have time to look for individual businesses and take their own call. They need our help right from research to allocation to exit. And for them, this is the kind. So one was education, second one is stock recommendation, and the third one is portfolio advisory. I hope that is clear now, right? Uh, at what criteria do you decide fundamentals only, or is it also including technical analysis? So, Rohit, good question again. I personally have never used technical analysis. As on date, I don't have any intention of using technical analysis for this portfolio. However, I don't want to say anything. Don't take this as something which is casted in stone. Tomorrow, I may change my mind. If I find technical analysis helping me in some way, I may use it. But as on date, I have never used in my life technical analysis. So I don't see that, at least in the near future, I don't see that uh, in our portfolio. Uh, what, according to you, is the best in terms of cost and smart decision for an investor who has been into market for 3 years, is able to invest maximum 25K per month? Which ZN service they should look for? Uh, Aman, this is a tricky question actually. First of all, you should not, I will say what you should not do. If you are someone who is, what according to you is the best for anyone who has been into market for 3 years? So if you have a 3 year uh, experience in the market, I think ZNAS, which is the stock advisory or stock recommendation service, that you should not take. That is not for you. Okay. Uh, Now the remaining ones which you can take probably is, one is the education service, and the second one is portfolio. Before opting for any of these or both of these, you should ask yourself this question: what is more important for you? Do you want to invest that 25K per month and attain a decent return and try to beat inflation easily? If that is your objective, probably you can go for this service. which we are talking about right now, the stock SIP portfolio. But if your objective is to learn as an investor how to do research, how to find microcaps, what are the different strategies, what are the fundamental patterns which you should look at, then probably our educational service is something which can be more useful to you. However, before this, thinking about these two services, if 25K per month is the only investable portfolio, investable sum you have, and you don't have any investment anywhere else, think hard about it. Uh, are you sure you can manage the volatility of this space? That is a question you should try to answer. If you think you can, then only go ahead. Okay. So I think I've answered all the question now, right? Aman, I hope that answers your question. Uh, So thank you so much, everyone. I don't see any further question from anyone. It was great interacting with you. We will keep sharing more updates on the stock SIP portfolio through our social media channel, and more details about stock SIP portfolio will be there on the description of the video when we upload it. So please stay connected and don't hesitate to ask any questions even after this. You have our coordinates. You can always reach out to us. And it is always better to clarify and be assured whether you are sure this is for you or not. We don't want to force anybody to join this. Okay. Thank you so much, everyone. Have a nice weekend.